Okay, this is, I'll just read the net NPA figure first. Percentage of gross NPAs is 10.33. So as a percentage, it appears to have gone up compared to 9.83, I think, which was the last number. And the net NPA is at 5.61. So the gross NPA is 1.99 lakh crore.
So 10.33%.
Yeah, it's gone up from 1.86 lakh crore to 1.99. NPAs have gone up for SBI. That would be a bit of a nasty jar. You will have to say that is the most important number. And quite clearly, I mean, with so many subsidiaries coming in, the amount of non-performing loans have gone up by about 13,000 crores. It's not a great deal, 1.86 lakh crore to 1.99 lakh crore, 13,000 crores. But still, that would be, I think, what, 5% or something that it has gone up by. Well, that is the first 5 or 6% that it has gone up. I think 6%. Okay, we are, the net profit is, oh, don't tell me it's a loss.
It's a loss.
It's a loss.
It's a loss.
Yeah,
It's 2,400 crore loss compared to a 2,600 crore profit year ago. So that's the second nasty jar. Maybe it's a lot to do with provisions. Provisions for non-performing assets has gone up to 17,700 crore compared to 7,000 crore year ago, which is, of course, I think the merged or the standalone entity, if I'm not mistaken. I wouldn't know if this is, I think it's like to like.
It's the merged numbers that they are now releasing.
Announcing. So, okay, in the merged number itself, then that is the reason. It's a 10,000 crore jump in provisioning from 7,000 crore to 17,700 crore that they have announced for only non-performing assets. This is not total provisioning. This is provisioning only for NPAs is 17,700 crore compared to 16,700 crore in the year ago, in the previous quarter. In the September quarter, the December quarter, there is an increase in provisioning of 1,000 crore, but from compared to last year, it's a 10,000 crore increase, and I think that singly has led to the rise in to the loss number. I'm still waiting for the NII figure. I mean, it's getting calculated, of course.
Yeah, the NII is at 18,688 crores. So that compares with about 14,752 crores, and it compares to our poll of 18,153 crores. So the NII is slightly higher than our poll. So NII, I repeat, is at 18,688 crores. That compares to our poll of 18,153 crore, while on a YOY basis it is up 26.7%. While we were expecting NII to decline by 2.3%, it has actually increased by 0.6% on a sequential basis.
Okay, you were expecting a 5% jump, but all you got is a 0.5% jump in NII.
No, NII we were expecting a decline of 2.3%.
Are you sure?
Yeah.
I have a standalone one poll at least saying that it will be 19,000 crore.
Oh no, that poll is not there.
Oh, okay.
I recorrected the number. So it is at 18,153 crore of poll. So that we were expecting a decline of 2.3%, while it has
shown an increase.
Little increase.
Okay, so the NII is flat to higher. NPAs are higher, provisioning is higher, leading to a loss of 2,400 crore. Those are the broad numbers that we have, and we already can see Chairman Rajneesh Kumar about to address the press. I'm just trying to see if there is anything more in terms of divergences or provision coverage ratio that the bank is speaking about. Yeah, there is a rights issue. The bank has allotted rights shares, but all that is known. I'm just coming to, okay, non-performing assets of 23,000 crores have been classified. Okay, as... Oh, I think there is a risk assessment. I think there is an RBI divergence of gross NPAs, about 10,000 crore extra in previous, in 2017. They had reported 1,12,000 crore, but RBI has told them to recognize 1,35,000 crores. So SBI, the mighty SBI has reported divergence of 23,000 crore. I think we can cut to the chairman.
There were no major sale of investments in this quarter. And third thing is, of course, the provision and payment for employees, because from November 17, the the wage negotiation or wage settlement has become due, and bank consciously has decided to make provision, which is about 700 crore. So as a combination of factor, and on the top of it, in December, keeping in view the risk-based supervision for March 17, a few assets which otherwise were in stressed assets category, they have been put in NPA category, and consequently the provision has been made at an enhanced level. The PCR has gone up by more than 100 basis points, and if we look from June quarter, the PCR has improved by 600 basis points. So more and more the bank's strategy has been to align the provision with the expected loss. So that has been the conscious strategy which bank has been following, and this is a combination of these factors which has resulted in the quarterly loss. But there are many positives which also needs to be taken into consideration. One is as far as the slippages are concerned, and if the situation is compared with the previous year, the slippage ratio has come down, and even in absolute terms, for the 9-month period, for the merged entity, the NPAs are much lower. The growth in retail continues to be robust, and SME particularly because of a couple of factors. One is the internal delivery mechanism which bank has put in for SME segment, which includes more feet on the street, changes in the lending method, and availability of cash flow data, plus the changes which the government has brought about in SME lending. As a result of this, for the first time in this quarter, we have seen a robust growth in SME. Housing loan, auto loan, personal loans, which does not include credit card for us because these are housed in a separate subsidiary. So they all are doing very well. And another issue which needs to be considered is that the merger of 6 banks. So bank has been now able to completely absorb, and the performance of the bank as a whole on the retail front has started signs of improved performance at all levels. There is some improvement in NIM, very marginal. Other income, as I said, that if we set aside the treasury income and the investment or one-time item which came in the second quarter, the other income is showing a good growth, be it income from government business, miscellaneous income, write-off, cross-sell income. On all fronts, bank has been doing very well. NPA slippage in this quarter has been 25,836 crore, but as I mentioned that these assets, 90% of it was already in stressed assets in one way or another. But now they have been recognized as NPA, and taking into account the supervisory review of the bank as on 31st March 2017. While reviewing the performance of the bank for this quarter or this year, this has been a challenging year for the bank and banking industry as a whole, and SBI, of course, we are no exception. But here I would like to mention a few facts that every cloud has a silver lining. And going forward in 2019, our estimate is that we will be able to contain our fresh slippages as well as the credit costs within 2%. And 20, our target is 1.5%, and this should result in an ROA of 0.6% for the bank in 2019 and 1% minimum in 2020. That is the target. Bank's focus will continue to be supporting the SME sector, and a few enablers which have been created by the government and Reserve Bank of India in the latest monetary policy they are going to be very helpful in banks' growth of SME sector. As I mentioned in my remark earlier, housing loan, auto loans, we continue to be the leader and have been able to maintain the market share at the existing level, which is more than 30%. All our subsidiaries, they are doing very well, and there is a lot of value in the subsidiaries. Their results are available, and they have given enhanced performance, which is very satisfying. One major issue is around the capital infusion. So Board has already decided today to issue preference shares to the government to the extent of 8,800 crore, which is part of the recapitalization plan of the Government of India. And as a part of MOU which bank is signing with the government, apart from certain reforms which are expected from the banking sector as a whole, and SBI being part of that, we are signing a MOU with the government that 20,000 crore will be raised in the next financial year by the bank, and without Government of India subscription to it. So on the whole, the current quarter definitely is disappointing, but as I said that going forward there is a lot of optimism, and the entire strategy of the bank, the focus on profitability, the focus on return on assets, the focus on rebalancing the portfolio. So all that work is very much in the final shape, and from next year, starting from 1st April, we will all start on a very positive note. So these are my opening remarks, and then I'm open to question one by one.
Priyanka. Okay. So the divergence, could you just break that up for us? How much was added to the NPAs, and also how much additional provisioning only on account of divergences?
So approximately 23,000 crore was the divergence, and provision is about 6,000 crore, approximately. But when we say divergence, one thing I would like to clarify, that all these assets, 90% of them, they were in the stresses of the. So it is only a question of timing. So where the supervisors feel that in March 17 they should have been classified as NPA, but bank has classified these accounts as NPA in these 9 months.
Were any of them standard assets as of the third quarter before you the RBS case?
No, RBS. Yeah, please.
There was an account of 2,835 which was an NPA before the divergence in June itself, and there is an account which has been upgraded subsequently as well.
About 19% has been upgraded in December quarter.
Could you just repeat the number of the fresh slippages during the quarter?
25,836 crore.
What's your view? Do you think that as far as the recognition, the fresh slippages are concerned, have they peaked, or do you expect this to perhaps still continue in the coming few quarters?
No, it has peaked. It has definitely peaked. So if you say 25836 in 1 quarter, so that is definitely the peak. It is not going to exceed this in any quarter going hereafter.
So how many of the slippages were from the watch list that you had earlier identified?
As I said, almost 90% is from the watch list. Only very few smaller accounts and one more account which was not in the watch list. So that is about 4,000 crore approximately.
It is watch list or standard restructured or S4 SDR.
Yeah, that is what all.
That the total impaired asset pools that we had, out of that 90% is slipped. What has slipped is 90% from one of these pools.
Could you reiterate the position of the watch list at this point, how it stands? If you could tell us what the movement has been from the watch list.
Just the watch list.
Just the watch list, yeah.
It is now down to
10,834 crore. So that is the watch list as of date. And for the bank, which has a portfolio of more than 19 lakh crore in loans and advances, this quarter we have given the watch list, but I think going forward we will not need this number at all.
So would you be winding down the watch list
Yes, yes. Because now, as I said, that recognition part is now more or less over. Whatever remains, or whatever this is like quarter on quarter on quarter. And there is no need for the bank to declare the watch list anymore.
So would any incremental provisioning be required, since we are talking about the resolution phase now? Is there any part of it that still needs to be provided?
So on NCLT, we are almost at 60%. And we have to see, because some of the major accounts, there is still the resolution process is on and the bids are coming in. So there will be many accounts where we are over provided, there may be some accounts where we will be under provided. On the whole, the overall NCLT 1 and NCLT 2 is 78,000 crore for the bank. So if there is any shortfall, say 5% or even 10%, so that is all within the manageable limits for the bank. It is not going to make any major dent anymore as far as the bank's profit is concerned.
So just one number that I was wanting, what was the gross slippage number for the third quarter?
25,836 crore.
Sir, so of that 23,000 was from the divergences. So of the remaining amount, what was the area that these fresh slippages came from?
I just want to clarify on that 23,000, this RBI report is as on 31st March
2017.
for SBI solo. So what this quarter slippages, the outstandings change, the merged entity has come, so it will not compare the number this quarter.
Exactly.
What we have taken and March, the divergence is as on 31st March for SBI solo.
Alright, but outside of that, the fresh slippages that you've seen
Are nothing much.
lumpy accounts.
No lumpy accounts.
So what is the, you said about 19% has already moved to the standard category or has been resolved in some fashion. What about the remaining 81%? What's your outlook on that?
On what?
On the remaining assets which were classified as NPA during the quarter. What is your outlook on that? How soon can you see them?
So that's what I'm saying, that particularly one is that this is an ongoing process, but NCLT 1 and NCLT 2, which is 78,000 crore, out of which 44,000 crore is NCLT 1, and that resolution will happen by April. So resolution plans are expected within February, and then there is a process. So NCLT win list is not going beyond quarter one, and not everything. Some accounts, minor 2-3 accounts, they will be even resolved before 31st March. But rest of the accounts will happen in the first quarter of the next year.
So what is the quantum of additional provisioning that remains for the two NCLT lists for the fourth quarter?
No, as I said, that we have to look at the overall trend. What is the trend emerging? But we are provided to the extent of 60%, so which I believe is a sufficient provision. And if at all there is some more requirement, that will not be as significant.
So the divergence that was reported, which sectors were these assets belonging to?
It is largely power sector, and there are many projects which are under implementation. And but there are like issues around like how do we interpret and this thing. But this is 14,000 crore is power sector.
Power is for 10,000. Generally, the breakup, if you want, is power will be 10,000. Diversified will be about 4,500. Then we have telecom, which is 2,600. And iron and steel, which is 4,400. And the balance is smaller accounts.
Miscellaneous smaller accounts.
I'm just curious to understand what really led to the divergence, because you always have been prudent as far as your classification is concerned. So what really stoked this large divergence in the numbers reported?
No, it is all right. Like there is a supervisory process. So ultimately, it is the supervisor's views that will prevail. So I don't think we need to go into any detail into this issue. But the fact of the matter is that in supervisor's view, these are the NPAs. In our view, they were always under the stressed assets category. So it is only a question of timing difference. So I don't think I have to comment anything beyond this.
So it's surprising because last year when some of the private banks were reporting large divergences, SBI did. this year the reverse was the situation. So
No, but they might have declared their supervision, RBS report for March 17, might have happened earlier.
no, I'm saying.
Yeah, that was the, no, that
So-
was the case. But the fact is, like Chairman is mentioning, that 90% of these accounts have slipped from one or the other category. Now, like we said in the beginning, 12% of those accounts, even well before the RBI report we had classified in June itself. So these are stressed accounts. There are certain initiatives that are being taken in those accounts. If they don't pan out, they classify. It's basically, I would say, a timing difference, rather more than anything.
More than anything else. And this divergence question, so depending upon when the supervisory report has come, so in some cases it came before September, so the World Bank said in September.
They are talking about 2016.
Yeah, 16th we didn't have any divergence.
Others had at that time.
So others had, but 16 we did not have any
On the
divergence.
treasury side, what are the losses?
As I said, that 3,500 crore is mark to market, is straight, and the treasury income has also been impacted. So which is 1,000 crore against 3,000 crore?
1,000 crores against 3,000.
3,000 crore.
So 2,000 crores, the treasury income has got impacted, which is above the operating profit, and below operating profit, the mark-to-market provision, we had to make about 3,400 crores.
What else played into this operating profit decline of about 18%?
So we have told you one is the treasury
Apart
income.
from the treasury?
And apart from that, when you declare any account NPA, there are some interest reversals also. And it is a combination of those factors. So largely treasury income plus some interest reversals.
2,000 crores is treasury income, and about 700 crores is the wage revision provision, which we've started making from 1st November.
What is the assumption in terms of the wage hike that you're using to provide?
So whatever is the historical, Prashant.
Prashant, would you like to say?
It's a 10% anticipation in the wages.
So just one question on the slippages. What led to such large slippages despite the divergence amount?
No.
It's because of the divergence.
It is because of the divergence is part of this. So basically these are all stressed assets, as again and again I am saying that all these accounts were sitting either in watch list, SMA2 or SDR or S4A. So they are all part of that. So if you look at the overall stress book, forgetting the differentiation between NPA and stress, so bank's stress book is not going up. Only thing what is happening is that from stress book, the accounts are getting classified as NPA and being provided for at a higher rate. So that's
So your SMA2 book look at this point?
that we never discussed, but it looks very good.
See, the thing is, for example, the standard restructured debt as on 30th September was 34,000 crores. Today it is 20,000 crores. So 14,000 crores has moved.
So
into the
movement
NPA.
is within that stress disputes.
So just one question slightly away from the financials. In the second half of the financial year, any monetization plan as far as the non-core assets are concerned?
This year it won't be very significant, this quarter, but we have plans for 2019 and 2020.
So the general insurance is not in this current financial year?
No, current financial year we have just 45 days left, so no such plans.
So personal guarantee invoked in that NCLT cases, because we've been hearing from news about that.
Yeah.
So is there any reports about personal guarantees in that?
No,
NCLT
State Bank's position is that we have invoked personal guarantees even if the case is in insolvency process. So what is the question?
No, so there were some reports in newspapers that, as per sources, that personal guarantees been invoked to recover it.
So that's what I am confirming, that either they have been invoked or will be invoked. So that is bank's position.
Sir, the MOU that has been signed to raise 20,000 crore, could you just elaborate a bit more on that? Like, how will it be faced? Will it be via the equity market? Because you said the government will not subscribe to it. So
Yeah, it is other than government, 20,000 crore. And we will plan it out that in what manner, mode, what time. So that will happen within the next financial year. But when will it happen and what will be the route, that we will decide.
what would be the need for it, sir, at this point? Because in terms of
So we are, I don't need capital for, say, for my provisioning or anything. But we are very hopeful that next year the credit growth should pick up. And bank will need capital to support that growth.
So what kind of credit growth are you looking at? Because even if we look at the 8,800 of the recap already given and this additional 20,000, what is the number you're working with?
So next year our target, internal target, we have set at around 10.3%.
So we also have this announcement from the governor and the deputy governor about harmonization of the MCLR with the base rate. He said it's a harmonization, not an equalization. What should we understand from this? And if you could give us in terms of your bank, how many customers are still on base rate? What will this mean?
Neither you have seen the circular nor I have seen. So let the circular come and then we can discuss it.
One last question from this side, then we go to print media.
10% credit growth. Now, is it some sort of a revision because you're trying to sort of have a sort of moderate growth plan for the next financial year?
No, for a state
Some of
bank.
the other guys are growing at 15, 20.
So, right, but I have a advances level of 19,25,000 crore. For 10% means 1,92,000 crore. So you can't compare me with someone who has a balance sheet size of 1 lakh crore and with 20% growth, and a balance sheet of not balance sheet, the loan portfolio of 19.5 lakh crore. So I can't grow at 20%, obviously.
I'm asking you is because a lot of people are saying that the economy is well past the green shoot stage and now sort of seeing more demand.
So that is my point, that ultimately whatever is our market share in activity, because of the size in percentage term, always State Bank will be looked as it is a lower growth. But when you look at the absolute growth, then for 10% for me means 1,90,000 crore, right? Which is a bank. Many of the banks are not of that size. So that is what is the maths behind it. So percentage growth for SBI is not the right way to look at it.
So for the fourth quarter, then
Last question.
Are we do we expect that it will be back in the black? And
Talk to me 2019 and 2020. So there is no point in talking about this year.
Continue then into the fourth quarter as well.
It's okay. Like as I said, that one is the recognition part. So we have peaked. Slippage ratio is coming now. Credit cost continues to be elevated, and because many of the resolutions will happen in June quarter, so I don't want to sound to be very, very optimistic on the fourth quarter. I'm not very pessimistic about it either. But what we are looking in State Bank of India is look forward 2019 onwards, and there we have certain estimates and plan to achieve a certain level of ROA and ROE. So that is what is on our horizon. Today I am sitting in February. In 45 days no miracle is going to happen. But we can hope for much, much better performance in the next year.
So you said
Guys, please.
also be there on rebalancing
please.
Let us take
We'll
one
have
question.
Print also. Last
No,
question.
that's
You
okay.
also spoke about focus on rebalancing the loan book. Could you tell us how it stands at this point and what really the focus will be? Because retail seems to be gathering momentum for the bank and is a focus area. So if you could tell us what the mix is like.
So as of now, if you look at our domestic book, 60% is now in retail, which includes for retailers means housing loan, P segment, and agriculture and SME. So our effort would be that this 60 becomes higher, but at the same time, we are very mindful of the fact that as we
Okay, well, I think most of the important questions have been covered, and I think the key takeaway is that there has been a sharp increase in NPAs. And more importantly, much of it has also resulted because of divergence, 25,000 crores because of divergence and an attendant rise in provisioning as well. 23,239 crore last year's divergence increase in NPA. And this year, of course, the slippage, they've given me a slippage number of 25,830 crore, but I don't know whether it is net or gross. If it is compared to 14,000 crore last quarter, then that's a substantial increase. Must be largely because of divergence.